What do you think will be the three main trends that we will see play out within financial services in 2026 and why?
Yeah, so I think the three main trends in financial services. The first is just the unification of the different financial services experiences. You see this everywhere. With Xero, we've broadened from accounting into being able to do payments and payroll. Whether we're doing this ourselves and building it ourselves, or we're partnering, like we're partnering with Gusto and embedding them in. And you see the same thing with like Brex. Brex started off being spend management, but then they broaden into banking as well, and they have bank accounts for their businesses. So I think everyone in financial services is either building or trying to partner to build a unified experience for their customer, unified horizontal experience for their customer. So that's one. I think I would be remiss not to talk about AI, because AI has a lot of difference it will make to the financial services industry. And in AI, I think you'll see three different trends. So the first is, with AI, really the way people communicate with applications is changing, right? Like you can now be much more human. So what that essentially means is that instead of going and clicking through multiple UIs, you can actually like just converse like a human being. And I can go, hey, tell me this information. The AI can bring back the chat app can bring back that information. And just like if a human being, as a human being, if you asked me, hey, something that had to do with numbers and I showed you a graph, the chat app can show you a graph. So you'll have UIs that change in the back based on the kind of task you're trying to do. And generally, it'll be much more of a human interaction. I think the second thing is, what we've seen is people are expecting more automation. Agentic is the next is the big buzzword today, but in many ways it's true. We've seen our customers demand that that we provide them with automated actions and workflows so that they don't have to go do a bunch of stuff. It saves time for people, etc. And so you're seeing that all across financial services, no matter what. Approval workflows where you have to prove things for people, workflows for getting data in, workflows for making sense of the data, all of that stuff. And then I think the third thing you'll see within AI is insights. At the end of the day, financial services is all about data, and it's all about being able to understand that data and how it impacts your business, right? So the ability, earlier you had to get the data, crunch the numbers, and it requires time and skill. Now your LLMs can do this for you. So like we have a lot of customers asking us, hey, given what our trends have been in the past, as an example, how much cash am I going to have 3 months from now? Right? What do you think? So that's kind of like bringing the power of analysis into the hands of customers, and I think more and more financial services companies will be able to do that. Whether you're a bank, whether you're a spend management card like Brex, or you're an accounting software like us. And then the final thing that I think is actually is not spoken of enough is, once you can converse in natural language. So this is not so much of an AI trend, but AI enables this. I don't today, like, do I really have to go into my app if I want to understand what my bank balance is? Can I just text my bank and say, hey, uh, at Wells Fargo, what's my bank balance today? And shouldn't Wells Fargo be able to return that? So the ability to interact with what is historically considered a SaaS app, but being able to do that through multiple channels, is something that I think will open up.
Okay. I mean, you mentioned quite a lot of exciting things there, but if you had to pick one thing that you and your team are working on right now that you think could be a game changer next year, I mean, actually in the hands of users, and it'll be, wow, I can't believe I lived without this before. Anything that comes to mind, anything you can share?
Yeah, so I think we recently launched an enterprise-grade analytics platform, right? And it provides CFO level analytics for small businesses. If you think of small businesses, the one thing that they have never been able to get, that big companies get, that help them run their business, is deep insights into their business and analytics into their business. What we've been able to do is, with these analytic capabilities, and a lot of this is because we've had AI, we now have AI to help us do this, is be able to help you with things like, um, if you were, let's say, if you were to spend X, and an example we always give is, you're a bakery and you deliver baked goods and you want to buy another van. but you don't know what the return for the van will be. So you do a bunch of scenario planning, and then you can have us go out and find you the best van for the right price, for the right rent. Like, do you buy it? Do you lease it? Do you rent it? All of that stuff. So it puts the power of, we like to call it, 1,000 analysts in your pocket, which most small businesses don't have, and really free small businesses up. Another example here is like, hey, I'm a small business. I'm a corner hairdresser, and I don't know what I'm supposed to be making in cash. Do I have the right revenue? Do I have the right cash? How does that hairdresser benchmark? Because we have so many businesses and so many businesses that use us, we can actually tell you, well, a hairdresser in your location sort of makes $100,000 a week, and so we can start helping you benchmark your business. So I think all of these things, our hope is by putting information and analytics and intelligence in the hands of our customers with our Xero Analytics product, we will be able to actually get more and more small businesses to be able to make better business calls so that they can flourish more.
I mean, it's pretty exciting if when we get to a point where we can just sort of outsource some of the thinking. But a lot of people are concerned about AI still hallucinating. And would people, I mean, going to your van example, if your platform suggests you should rent this van from this vendor, it's going to make you this much money. What if it got it wrong and then I act on that information and I don't know, I go out of business because the van was actually twice the price of what I should be paying or whatever? How do you think about AI and hallucinations and humans or your customers being able to trust? And thinking about it now, like liability, could they come back and say, "Hey, you told me to rent that van and it didn't work out. Now you owe me 100,000 for that van or whatever"? How do you think about those things?
Yeah, so I think this is a fantastic question, and in financial services, you just can't go wrong with the numbers, right? Like, you just can't go wrong with your advice. And I think there are two ways we're attacking this in. One is we are actually not using one is technical. We're not using just off the shelf LLMs. We have a way to tune them and ground them, and we have guardrails we put in, technical guardrails, to say if the LLM does not, if you do not use an LLM, and you try to get to the same answer, what is the answer? And if the LLM does not return the answer within a certain set of guardrails, we will actually not give that answer, right? So we try to bound the LLM in a way where it can't go crazy. The second thing I think, which is more important from a customer perspective, is how do you ensure that they have trust, right? And that trust really comes from the ability to have a review and audit trail. Okay. And what we mean by that is, if you say, hey, this is why we believe your cash flow will be, you will have, let's say, $1,000 extra in cash every month. And then you go, okay, we made this assumption looking at your historical data. We made this assumption because every December or every November or every December, we've seen that your sales spike by X% from what it was in October and November. And so the person looking at it can actually go, yes, the reasoning you're using makes sense. The data you're using makes sense. Then you go, okay, we think that it's going to spike by Y percent. So you just don't say buy a van, right? Like, you go explain the reasoning, and then when you say, hey, you should buy a van, then you go, we believe the prices of vans that you would need are XYZ. Here are the links. Go look at the links. So I think you have to give them an audit trail. A great example of where we give an audit trail is we actually save our customers about 8.5 hours a month with our agentic AI products. And one of the products, so we do books 10x faster. We do month end close. We make it easier for them to do month end close 30% faster. There's this process called bank reconciliation where you manage your bank balance, and you look at the transactions you've conducted, and you say, hey, to close my books, I want to make sure I understand what I've been paid for and what I haven't been paid for. Historically, this has been a manual process. We bring in your bank feeds, and then you go look at every transaction and you try to match them. Now with agentic, we auto match them for you. But when we auto match them for you, we create a review panel where we say, here's why we matched them. Here's the document we matched this bank account. So you can quickly eyeball it and go, hey, does this make sense? And if we have if we don't believe our LLMs are 95% accurate, right? We will not actually do the matching. We will leave it to you to do the matching manually or suggest a matching, right? And say, we think it's this. Can you please confirm? So I think that's where building those review workflows and keeping your accuracy bar for accuracy high. And if you can't meet that bar, you go, I am just going to not return an answer. I think is pretty important.
Zooming out a little bit and thinking about your role in general and others in the similar position, how do you balance the need to do the BAU stuff, like the, I don't know, the infrastructure that on which the company's success was built on, versus some of these perhaps pilots or new initiatives that might be exciting and could be a game changer, but they could also perhaps don't go anywhere? How do you make sure you balance your time, and how do you lead effectively in times like this when there's so much going on, there's so much you could be doing?
Yeah, that's a fantastic question. So I'll answer this from two perspectives. One is how do we allocate resources, and then how do I spend my time, right? Um, uh, from an allocation and resource perspective, there are multiple frameworks in product development, like in product management, in terms of how do you allocate resources across different types of product development. My own personal one right now for where the industry is, and this changes by where where Xero is, but this changes based on the company, the stage of the company, the challenges the company is facing, and then what the environment is like. You spend 30% of your resources on BAU. So your customers are telling you, I want to add these tiny features, or I want these paper cuts solved, etc. And generally you should spend 30% upgrading your product in that way. So for us, this would be things like, oh, I need a new report, right? Or I think you could make that workflow a little bit better. You have one-step approval. Can you add a two-step approval, right? Then you spend about 30% of your resources on completely new things. So like we don't today have or sorry a couple of years ago we didn't provide we had you could send your customers an invoice, but we did not provide them an ability with an invoice button to pay back, right? That's new functionality. So you spend about 30% of resources on that functionality. And then in today's day and age, this used to be less earlier. You spend a good 30% just keeping up with industry trends and 30% experimenting, because if you don't do that, you are probably going to get left behind. And there are some things within that 30% that are pretty sure. Like when we launched our auto bank reconciliation, like usage is very high because it saves people time. It's obvious, right? Like it saves you 8.5 hours per month, and it's obvious. So you essentially can we know, while it's new technology, we know the benefits are pretty well known, and so there will be adoption. And then there are things that are more moonshotty, like some of the things which I can't discuss, but they are moonshots. Like, will this take off? Will this not take off? And you spend about 10% of your resources there. In terms of my own personal time, I think I would say I spend less time personally on BAU because I have a very strong team of leaders that handle that very well. I spend probably 50% of my time on like newer areas, newer functionality and features, and then 50% of my time on give or take, you'd say 40%, and then 20% on BAU, 40% on innovative. Where is the company headed? Maybe even 50%. Where are customers headed? Where does the company need to head? Where does the product need to head? What does AI mean for us? What does a unified financial stack mean for us? Who should we partner with, etc.?
Actually, that's a good segue to my last question. So I often talk about the bank stack and how financial institutions used to be siloed from tech companies, but we're seeing this initial trend where fintechs was going to run banks out of business. But now there's like this other wave almost where financial institutions or fintechs recognize that they need to partner with these traditional established financial institutions. What are some examples of Xero embedding financial services hosted or serviced or supported by financial institutions? And do you have some examples of how that's been successful?
Yeah, absolutely. Our product does not work, or our platform does not work unless you are unless we have all your bank information. because at the end of the day, accounting cannot work without knowing the cash in your bank and why the cash came in. So, for example, we partnered with Plaid to ensure that you can automatically get all your bank transactions in our UI. That's one example. And what you can do with that is Plaid obviously helps ensure we connect to the banks. The data comes in, we clean it up, we make sure it looks exactly like what's in your bank. So it's a replica of your of all the transactions in your bank statement. That's one example. Another example is when you think about banking is like our get paid, like our like you send an invoice, can your customers pay you, and your how do we make payments. So recently we actually bought Melio, right? Melio is a bill payment company that allows you to essentially be able to pay a bill. So you can directly withdraw the cash from your bank account and you can pay the bill, or you can pay it on a credit card, etc. So I think those are the ways we are incorporating more of the financial services aspect into our product, to ensure that we have a more unified horizontal financial services app stack.
Diya, thank you very much. Super interesting to hear your story there. Thanks.
Thank you. I appreciate the time. Awesome.